Hi all traders, welcome to TCM Education. And another day in the New York Stock Exchange, and the Nasdaq ended with the S&P not doing much. We'll bring the chart of the S&P in a second into the mix here. So that's the S&P 500 yesterday. We basically started with a nice gap up, positive sentiment. Nvidia was upgraded. We traded as high as 424, pulled back, set basically at the lows, and then ran almost back to the highs within, I don't know, 1/3 of 1%, sorry, 0.1% from the highs at the end. So as you can see, the price action was very, very mellow. We got a boost at 2 p.m. From the FOMC meeting minutes that happened exactly here. And there was a little bit of pickup in volume and some trajectory higher. So we closed. We didn't close at the highs of the day, but we closed at 4-hour highs. Again, this is not something. This movement is not a real market mover. It's a market crawler, let's call it. So individual stocks are highly to be influenced by this move. Obviously, Nvidia and JP Morgan and the most important stocks are drawing some strength from this move, but the overall market I think is mostly oblivious. So what do you do as a trader, as a day trader, when you see this concept of the S&P? You see that it's crawling higher. Should you stay away from shorts? The answer is obviously not. If the stock is really weak, this movement in the S&P is not going to influence it. Most likely it's not going to influence it. And nothing is for sure. So it comes down now to your decision as a day trader: entry points, risk, targets, quantities. Let's move now to our basically business, which is analyzing a bunch of lists. And being that the markets are closed, let's talk about the daily power list, which is our most powerful, distinctive piece of analysis. And again, let's look again for those who are watching it for the first time. Volume must be over 5 million before you enter this list. Keep in mind, there are 6,000 stocks traded on both exchanges. 6,000, 9 made it to this list. Sometimes the stock makes it to this list in the last minute, so it doesn't help us. We'll see in a minute. We'll go over all those 9 names or symbols. But again, why volume over 5 million? Because we want extreme liquidity. Doesn't guarantee liquidity %, but at least you know that somebody is interested in that stock. Most likely institutional traders, but there are exceptions. We'll see those. Stock price must be above 10. That's already a given. We're not going to deal with small caps or micro caps or anything like that. And the most important factor is this: the intraday price range of the stock, meaning from top to bottom, it needs to move 10%, which means the S&P 500, in order to reach the range of 10%, needs to move $60, being it is a $600 ETF. So $100 stock needs to move $10, a $10 stock needs to move $1, and so forth. So it gives us as day traders that range from top to bottom, where we can look for not only 1% or 0.5% or a micro trade of 20 cents or whatever. It can really give us a lot of room, not us, I mean the stock, a lot of room, and we are obviously risking on this basically on this set of trades here. Okay, we're risking for those less. Hold on a second, I don't know why I can't draw it. Less than 1%. That's our strategy. We want to risk less than 1% on every trade, if possible way less. If the chart is going to give us an opportunity to risk less than 1%, we'll gladly take it. So now let's see, analyze only nine names on this list. Okay, let's start with number 1, BE Energy. The range was 14% at the end. Okay, this number obviously is at the end of the trading day. So it can move a lot in the last minute, and basically we won't be able to do anything. But 14% tells the story. There is something going on in B Energy. Obviously the volume is over. It closed up with a volume of 21 million shares. We'll look at the daily chart obviously and see what's going on. So BE. What happened with BE? First of all, it's easy to detect BE. Why? Because it gaps up and it's immediately, if it doesn't hit the power list, and obviously that won't hit it very early, okay, but it does hit all other screeners, because you're not using only one screen. So we're using a screen for strong stocks, we're using a screen for weak stocks, and this one is clearly a huge gap up and go. So obviously it moves up and down in the morning, and then does one thing which is easily observed. Turns around and breaks this 28 round number. So this is our potentially first trade. If you follow up on this stock, you can pre-enter at 28, which is a breakout here. The question is, where's your stop loss? You don't have a clear stop loss when it goes over 28. I mean, you're not going to take a $1 stop loss on a $28 stock. That's crazy. So, but now, after it settles, you can observe, and you have here 1, 2, 3, 4, almost 20 minutes to observe this this entry point. And the risk on this trade is the 30 cents, exactly the 1% that we require for a trade. It doesn't mean necessarily that it's going to come down 30 cents and move up. In this case, it moves straight up and never looks back. So the risk basically on that trade was 0. But you don't know that before the stock breaks 28 here in this at this point. So we move from 28 to 29.50, pull back and close at 28.70. So that's basically, if you stick 100% to the strategy, that's the trade from 28 to 28.70. That's shameful, and it always is when you leave half of your profits on the table, but that's the strategy. You trust the market to bring the stock to the highs and close at the highs of the day. It didn't do it. So you end up with a 4% winner, sorry, a 3% winner here. That's 25 times, you know what, actually less than 3% winner. But still, the risk was 1%, you got 3, tough luck, okay? There are cases when it's gonna close way up in the sky, and other cases where it can come back to the entry, okay? So I'm not going to talk about discussions where you can obviously sell half of your position or a third and then add, because then the discussion about one trade will take hours, and that's not the purpose. We want to show the basics, and then each trader can mold it according to his personal strategy. The idea here that you wait until the end of the trading day, and because you're trading a stock that's so unique, very, very unique in terms of hold on a second, guys. Let's draw the entry here again. So that's the entry. That's the entry. That's the basically the entry at 28, and you end up with 70 cents, meaning 3% in this case. Actually, less than 3%, like as I said before, and that's it. Is it a bad trade? No. Is it an optimal trade? No. But it is a trade that works because it's the right pick from the initial entry. You can see the pickup in volume, and it's a winner, which is very important, and more important than anything, the market is not helping. You'll find a tough time finding trades that perform so well like this one. I mean, from 28 to 29.50, that's 5%. Shame on it for for cutting half of the profits. Again, we're talking about a list, okay guys, a list that has only 9 matches, daily power list, yeah, 9 matches out of yeah, that's it. Now 9 matches out of 6,000, and this is here listed number 1. Let's take a look at number 2, GRRR. So what's good or bad about this stock? First of all, it gaps up and shows off, let's see, 21 to 22, 60. Okay, shows off in some screeners, but then it disappears. You look at this move down, so it's doesn't have any trend anymore, and then it picks up a trend, and then there are news, and obviously nobody's gonna. I mean, the chances of you buying this reversal here is 0. You're not watching Gorilla. What's the name of the stock? Gorilla Technology at 2 p.m. and this move is uncalled for. I mean, very, very aggressive. You can join, but there are no technical entries. This is not our style. Okay, so if the stock gaps up or moves up on new intraday news, we're not going to follow unless we see a perfect entry. Now, is there a perfect entry here? I don't know. I mean, it's obviously in the screener, but I'm not going to count it as anything other than an opportunity. Some traders can take advantage, others will have a problem. I have a problem, and I don't see it being counted as a great trading opportunity, although it turns out to be. It involves some risk. Number 3 on the list. Take a look at this. This is actually, I think, the best trade yesterday in terms of easiness, pattern, pullbacks. So look what happened here. Same scenario. The stock gaps up and then pulls back and disappears. So now here in this area here, you don't know about clean spark unless you follow it on the daily chart, which is very, very strong. But then it picks up strength again, and then it breaks over the highs of the day here at 12. Now at this point, it's back in the screener and gives you, if you're watching, a great opportunity. You can see this 10 cent, or actually less than 10 cent consolidation here. That's a 5 cent consolidation. Being that we traded this stock last week, 4 or 5 days ago, I don't remember exactly when. If you still have it in your mind, this is a winner. So this stock is trading a lot of volume. Ended up with 30 million shares of volume. This is a potential entry here. Let me draw it again, so it will stay on the chart. 1190. And the risk is 5 cents. Okay, so 5 cents of risk, and then there is another entry here at 12.10, and the risk is let's say another 10 cents. So this stock is going places, coming back, gives us an opportunity to buy, moving higher, pulling back, another opportunity to buy, and finally we have one that's hitting the jackpot according to our strategy, and it closes at the highs of the day. So that's one out of 3 stocks that that been observed by us so far. One we traded, it closed also at the highs, but this one is tradable, easy to trade, very great liquidity. You can buy as many shares that you can want here. You can buy a $10,000 position or a $50,000 position. You just need to load up a lot of shares because the price is only $12, but the liquidity is there, okay, for this clean spark. So the spark ends with a potential move from this level 1190 to 1250, which is 60 cents. 60 cents on a $10 stock is 6%, and your risk was half of that. The risk was not a full 1%, was 0.5%, but let's say the risk was 1%. So it's 6 to 1. 6 to 1 is a good day trading outcome. And again, why we can say that is a good outcome? That's a 6-1, which is great. Why is that is a good outcome? Because you have to look at a very distinct number of stocks to get this achievement. You're not going to do it with a SPY, you're not going to do it with NVIDIA, you're not going to do it with any stock that is like a leading stock. You need to go outside and search for those stocks that are really, really strong. They have a pickup in volume. Now let's observe the daily chart. Let me take off the view up. All you see here is the previous trade. So you can see a huge, okay, so the volume is not actually above average. The volume is great, 30 million shares. It's not above average. You can see that but you can see that the stock is very strong. It's basically near the highs of the year. It's very volatile as all energy. I think this is an energy stock. I'm not sure exactly if I'm right, but it doesn't really matter. I don't care if it is an energy stock or they're selling shoes or food. They're doing the right thing, and they are in the daily power list. So if they are in the daily power list, where is it? In the daily power list at number 3 here, and the intraday range was 10%, that's fine. Now, what does it mean that the intraday range was 10%? It's possible that this stock entered the list very late in the day. So it's possible it wasn't in the list most of the trading day, but it was obviously in other lists because of this number, 7.5%. And we have other lists, okay? Keep in mind, the requirements from the daily power list are very aggressive. This number, 10% on the intraday range, is a huge one. Okay, number 4, COGT. Let's see what happened here. The daily chart tells a beautiful story, a gap up and go a couple of days ago, and it continues to be very strong. Now let's look at the intraday. 3 minutes. And the intraday looks great on paper, but wow. I wonder why I didn't see it at all yesterday. Let's bring in the view up. I don't know if again, there is one potential entry here after it comes down from the highs, meaning from 11 down to almost 10, and reverses up this area here, where you need to observe an entry. If you don't do it here, basically it moves sideways from 12 noon until 4 p.m. So this whole area here, 4 hours of nothing. Why? Because all the energy was spent here on this move early in the morning. And you can see the huge drop in volume. So was there any potential trade here? Yes, but it was very early, not very easy to observe this consolidation here. Again, the market is not helping us, guys. You need to understand, you really need to work to find those patterns, but they are there. And we are doing our best to figure out the right tools, and we have the right tools, the scanners, the pattern, the risk, everything, in order for one trade to translate to a 10% winner on a $20,000 position. And you do the math, you know that it is the right thing to do. So SharpLink, number 5. Anytime I'm bringing this stock on, I'm not confident about anything that's going on here. So that's SharpLink yesterday. Terrible. I mean, there are trades long. Obviously, it's not shortable, so you can only buy it. Very tough. Again, you don't know what's the trend. It's sharply down, sharply up, then down again. No, it's in the list, but it's not a good trade. Obviously, here something very wrong with this stock. That's a SPAC, guys. What's a SPAC is a special acquisition company, where a stock that doesn't have any basically any business model or doesn't have any activity is being basically merging with outside of the market business, and they converge where the new business doesn't need to go through the whole procedure of listing, which is very expensive, and this combination creates an environment where the SPAC is basically pouring a business into empty shell company that trades on the exchange, and this process has been done hundreds of times over the last years. Most of them don't turn to be great investments. So I don't know what happened here. This is a fluke. Let's move on. MobileEye. Okay, now this is one of the most interesting places that we've seen yesterday. This is the stock, and again, so tricky and unpredictable. So what happened? What happened here in MobileEye? Can you as a day trader take advantage? I don't remember when I saw the stock yesterday. I think I saw it here at this level, but I'm not sure. Anyway, so the stock starts the trading day, nothing happens, sorry, actually in the first 3 minutes there are some news. So the stock moves from 1850 to 20, that's $1.50, that's 10%. Is it 10%? Yeah, 8 or 10%. So it spikes into all screeners, and then comes back to the entry, and then moves up to the view up, and then comes down again. And by the time all this happens, you ask yourself, what the hell? What's going on here? Is it a long? Is it a short? I don't understand what's going on. Okay, so you want to read about it? Maybe I don't think reading is helpful. Now, there's an amazing pattern short. I just don't think it's a feasible one to trade. If you see or observe, this is perfect. So this is a huge winner, but it has a caveat. Why would you look at the short play here where you don't know what is the trend? Basically, the trend is mainly up, not necessarily down from this bear flag or consolidation. So now it drops from 1860 to 1730 at the close, and closes the lows of the day, which is beautiful. But the only trade that I think is feasible was either that 18 entry, the breakdown here at 18 or at 1820. So this is, if you're watching the charts, this is the entry, risking 20 cents, which is the full 1% to get, in this case, 4%. So it's not a home run trade. Okay, it is a good trade short, and it's easy to observe it here at 18, while it's very hard to predict and observe it here at 1870, which makes it almost 10% winner. Yeah, almost a 10% winner instead of a 4% winner, which is a huge difference for us. Okay, a 4% winner is a nice winner, but an 8% winner is a home run, or 10% winner is a home run winner, and that's shameful. But that's what trading is all about. It's not. Sometimes it's tough to find the right entry, and finding this entry here is, I would have to say, very, very tough. Unclear. I mean, you have to have those instincts. I don't see them coming, and we're not trading instincts. We're trading, basically, we're trading patterns, and the pattern here is not clear. So this is not an entry short. This is at 18 an entry short, risking 20 cents and hitting a nice target from 18 to 70 cents at the low. So that's $17 in 70 cents. That's 4 to 1. That's 4%. Sorry, that's 4%. That's fine, but it's not a 10% winner. Okay, let's move on. We have only 2 more stocks. Okay, AEHR. That one, guys, immediately. I was watching it immediately in the morning. Why? Huge gap down. It was down, I think, 20% at one point. and then you look at what's happening here. Okay, so one caveat: at least on the platforms that I'm using, it's not shortable. So it's not shortable on Mumu, it's not shortable on the other platform that I'm using, which is Colmex, European regulation platform. So not shortable on both. Okay, but I don't care if it's shortable because I'm not really trading it. I'm just following it, trying to explain the price action, and the price action is miserable. I mean, you needed to find an entry point short. Let's say you are looking for a trade short. Where is it? You need to guess. So there is no bear flag formation. Very choppy. So anywhere you try to move to trade short, maybe down from the VWAP, and I don't know. It's obviously this is not working. You see, why force it? I mean, the stock is moving sideways for 5-6 hours, and a real entry would have been here, 1280 short. Why? Because you can see here, guys, this support level that's been tested and tested. I think it's going to be broken today. So this is the trade, down short at 1280, assuming you have shorts and risking like 10 to 20 cents, and the target will be at the lows of the day. So there's plenty of room for this 60-cent move, risking 10 or 15 or 20. So at least 3-to-1 in terms of potential. Overall, no. And again, it's not shortable. I think on most platforms. And the last one, and the most aggressive one, which I discussed yesterday when we discussed risk management in one of the videos. I don't remember, I don't have it in front of me right now, but it's on the channel. I link the description of both videos that we did on trade management yesterday. This is a disaster if you make a mistake here and thinking that this gap up is doing something positive. It turns to be a huge, very fast, aggressive leg down. How many times we've seen these fake gap ups and turning lower and gap downs? Maybe it's a new thing on Wall Street now where the algos are trying to fake move again. Too many of them. So this is either a money machine or it's killing the account machine, and it can be both. Keep in mind that the stock ended up down 40%, which is totally off balance. This is something that we don't trade. Obviously, it's not shortable, so you can't take advantage of this move. Okay, so the big moves are off the table. So it's not a fair trade. So if you can't take part in the big feast, you can take part in the small feast. I don't think that anybody should be, unless you see a perfect trade, and it's hard to see a perfect trade. The spreads are anywhere between 20 cents and $1, so you pay 1% per the entry. Lots of slippage here. Best thing to do is stay away. Okay, guys, I hope it was helpful. This daily powerly system is working. Anyway, it's not the perfect. You put in a coin and immediately you squeeze money. It's not. You need to work, analyze, work with different stocks and different screens. But you want to reach that 10% intraday threshold. It's doable with the right amount of brain energy and the commitment, and you don't need to invest your capital into it. Small positions are good enough if you're going for these super strong intraday movers. Okay, guys, please like, subscribe to our channel, and we'll see you in our next video. And one more thing, if possible, do share this video with your friends that day trade.